Stop your mutual fund SIP. Let the stock market crash, and it will crash. These are the exact words said by Shankar Sharma.
Let the market fall. In my 35 years of this business, I know FIIs walk in when there is a big market crash.
Now, Shankar Sharma is not a random person. He is a veteran investor in the Indian stock market. So when he says something like this, naturally people listen, naturally investors get scared, and one question starts coming in everyone's mind. Should I stop my SIP? Should I stop investing? Is a big crash really coming? So first, let us understand what he is actually saying. See, his opinion is very simple. We Indians are continuously doing SIPs in mutual funds. Because of this, the DIs are getting regular money every month. Then the DIs are going and buying stocks in the market. But when someone is buying, someone else is selling. And according to him, that seller is mainly the FIIs. So his point is that Indian investors through SIP money are indirectly helping the FIIs to sell Indian stocks at good prices. And if this continues, then FIIs will keep selling, DIIs will keep buying, and Indian markets will not make returns.
Let the market fall. In my 35 years of this business, I know FIIs walk in when there is a big market crash.
That is why he's telling the retail investors to stop investing. Now, if you listen to this once, honestly, it sounds logical. It sounds like a strong argument. But in the stock market, the biggest mistake investors make is this. They listen to a scary statement and then they take a decision that damages their long-term wealth. See, in the last 2 years, everyone knows that the market has not given any meaningful returns. And from its top, the market is still down around 10 to 12%. And according to Shankar Sharma,
FIIs walk in when there is a big market crash. Because everything then changes. So that India has fallen 30-40%, let's go back in.
It should fall by 30-40% to become attractive for the FIIs. So in this video, we are going to do 3 things. First, we will understand whether the market can actually fall more or not. Second, we will see whether a 30-40% fall from current levels is practical or not. And third, I will show you where I believe the real opportunities are right now. So if you're already invested your money or you're doing SIP every month, this video becomes very, very important for all of you. So keep watching till the end. Now, before I give my view, I want to make one thing very clear. I do not want to disrespect Shankar Sharma. He is a very experienced investor. I am only presenting my view, my logic, and my market reading on this topic. See, there is a very famous quote in investing which many investors like Warren Buffett, Rakesh Jhunjhunwala, Ramdev Agarwal, and Peter Lynch have proved again and again. Pessimism sounds smart. Optimism makes money. And this is exactly what Rakesh Jhunjhunwala sir also believes.
No, I think the first quality I need as an investor is to be an optimist. And remember what Peter Lynch says, that wars have come and terror has come and natural disasters have come, but company profits have gone up. So you have to be the eternal optimist if you want to invest in stock.
See, in the market, negative news always feels more powerful. When someone says that market will crash, people immediately listen. But if someone says this is an opportunity, people ignore it. Why? Because fear is louder than logic. But money is not made by following fear. Money is made by understanding value. So my first request to all of the investors watching this video is do not stop your SIP. Do not stop investing just because someone is saying something negative. Yes, I agree that market has not moved up properly. I agree that there are many problems in the economy. Crude price is high, FIs are selling, rupee is weakening, global tensions are rising. So yes, problems are there and I am not denying that. But this is also a very old rule of the market. When there is most negative news, bottoms are usually made. And when there is most positive news, tops are usually made. And that is why the market is difficult. It does not give you opportunities when everything looks perfect. It gives you opportunities when everyone is scared. The best example I can give you is of the IT sector. See, when everyone was pessimistic about the IT sector, we were not bearish, we were selective. Yes, in the IT sector, there are many companies with genuine fundamental problems, but at the same time, there are also companies with strong fundamentals, and one of them is Coforge. On the left side, you can see the message which we shared with our members in the month of March. Now, we recommended Coforge near 1050, and today that same Coforge is trading near 1400 rupees. Now, that is more than 30% gain. Now, think about this. When everyone was bearish, we did not blindly run away from the sector. We selected the proper stock, we focused on the fundamentals, and we made money. So, this is the difference between fear and research. So before you take any big step of stopping your SIP or exiting the market, you need to think properly, because after 2 years of correction and consolidation, maybe you're not avoiding risk, you are avoiding opportunity. Now let's analyze the market and understand what we can expect next. Now Nifty 50 is currently around 11% down and has been in a consolidation for more than 2 years now. In the past also, whenever such consolidation has happened, the upcoming year, especially the third and fourth year, markets have rallied. For example, from 2021 to 2022, for 2 years, the market did not perform properly. But after that, in 2023 and 2024, both years the market rallied a lot. The same thing happened from 2015 to 2017. For 2 years, the market did not perform. Then the market rallied. In 2018, 2019, the market showed a huge one-sided rally. So the first point is very simple. Do not exit now from the market. The reason is that market is near its bottom zone. Think of it like this. You wanted to reach a place which is 1000 meters away, and now you have already walked 900 meters and just 100 meters are left. And now you are thinking of quitting the race. You have already kept patience for 2 years. Now just keep patience for a few more months. Now let us see where the actual opportunities are. And I will not bore you, I will directly come to the point. Now first, let us look at Bank Nifty. So Bank Nifty has always traded in a channel. If you look from 2017 to 2021, it was moving inside one channel. Then it broke that channel and created a new channel from 2022 till 2026. And even now, Bank Nifty is following that same channel. Whenever it has come near the lower end of the channel, in the next few months, it has recovered. This has happened in 2022 also. When Bank Nifty came near the bottom of the channel, within the next 4 to 5 months, it recovered and again moved towards the top of that channel. In 2023 also, when it came down, in the next 3 months, it recovered. And the same thing happened in 2025 also. And now I am optimistic that the same thing can happen again. Bank Nifty from its top is available at almost 11-12% discount. And if you look at the channel, the upside potential looks around 18-19%. Now you might feel that 18-19% is not very big, but historically also the recovery in Bank Nifty has usually happened in 6 to 8 months. And to support this narrative, if you have been in the market for some time, or if you have some basic knowledge about the market, you know that during Diwali the market normally peaks. And Diwali is in the next 4 to 5 months, so we can see a good rally in the next 5 to 6 months. And in December, January, we might achieve this target of 18-19%. Now I have one very interesting swing trade for all of you. But before I reveal the stock name, I want you all to think for a second. Suppose there is a company whose revenue has grown by 2.5x and its net profit has also increased by 3x. But the stock price has not moved in the last 5 years. Now what will you call this stock? A bad stock or an undervalued stock? So I would call it an undervalued stock. Stock name is HDFC and it is trading 25% down from its top. Now I know as soon as I take the name HDFC, many people will feel bored. Some of you might think, Sanika, again HDFC, nothing happens with that stock. But this is exactly where money will be made in the next 6 months. See, the stock is 25% down from its top and trading near its crucial trendline support. You can see that this is the same trendline support where the stock had taken support in 2022, in 2024, and now also it is taking support near the same zone. Now look at the situation. Fundamentals are improving, revenue is improving, profit is improving. But because of bad negative sentiment and FII selling, the stock is still 25% down. But this is the exact kind of setup where smart investors start paying attention. Now I have already given a clear cut swing trade to my clients, and on the right side you can see the buy zone, which is 745 to 750. First target is 820, second target is 940, stop loss is 516, and expected time frame is between 3 to 6 months. So this is how I give trade to my clients. Clear buy zone, clear target, clear stop loss, clear logic. So this is an open trade which I am sharing with all of you as well, because you are my viewers and you support me by watching the videos, and I am expecting this trade to achieve its first target in the next 3 to 6 months. And my final message is, be careful, be selective, manage your risk, but do not become fearful, because in stock market pessimism sounds smart, but over the long term it is optimism with research that makes money. And if you want regular market updates, trade updates, and the logic behind such opportunities, then you can join my free Telegram channel. The link is in the description. And as always, this was Sanika from RangaOne Finance, and I will see you very soon in the next one. Till then, bye bye.